Greeting investors, and thanks for tuning to the forecast. I'm Jake Ackerman. Over the past week, we've watched the stock market slowly rise as inflation has continued to decline. Now, inflation's been declining for a while, but we really haven't seen that translated to the data until as of the most recent months. So with the inflation data continue to come down, we've seen stock prices and bond prices rise. Now, what's going to really transition this bear market that we had in 2022 to a bull market in 2023, or some type of a bull market in 2023? Well, we're going to need to see inflation to continue to decline, and we're going to need to see the Fed stop raising interest rates. Now, I think it's already certain at this point that on February 1st, the Fed has their next FOMC meeting, and they're going to raise rates by a quarter basis point, or a 25 basis point, a quarter point. So that's to be expected. What we don't know yet is what the March meeting will bring. Right now, the market expectations are that we're going to get a rate hike, another quarter point or 25 basis points, but that's still to be determined. When you listen to the Fed officials, they've come out and they come out periodically throughout the week, such as James Bullard this morning. What they're saying is they're going to be data dependent, but that right now they're predicting that they're going to have to raise rates higher. And the reason they're going to continue to talk in that hawkish verbiage is they can't say that they're going to give up and stop raising rates, or they're going to stall this rate raising campaign, because monetary policy will loosen, and it will loosen rapidly. So they need to maintain this restrictive verbiage stance to keep stock prices, other asset prices, bond prices from going too high too fast. They need a nice, slow, gradual increase in asset prices so inflation continued to come down. So they're doing this balancing act where I think they're acknowledging that, hey, inflation is definitely coming down, but they can't just let off the brakes. So I expect 25 basis points and then data dependency, hopefully. But if they're not, stock prices, sensing that the Fed is going to pause, can continue to rise. When it won't rise is if we start to see more poor inflation data, or maybe a geopolitical event. But at this point, inflation is coming down, stock prices can rise, and we'll have to read the tea leaves on when the Fed is going to stop doing that at this point. So next week, we have another inflation report. The following week, more inflation reports. So we have a couple more inflation reports throughout the rest of this year leading into the Fed, which we're probably going to continue to see the inflation numbers decline. Because we've already seen some of the inflation numbers from December come in low. So we'll start forward looking to January for that March expectation. So as stock prices continue to rise, we were continuing to see technicals, which is a lot of traders around the world, many traders around the world watch. As those continue to look and more bullish, we should see some more confidence come back into the market, more inflows of money due to the confidence, and thereby increasing stock prices and asset prices in the near term. And then if we confirm that we've defeated inflation, that's when we'll have to start changing our thought process, start looking really how earnings are affecting stocks, where right now there's a lot of weight that companies can shed, a lot of cost cutting that they could do before we start to be extremely concerned about earnings in the near term. So we'll be tracking that all along the way throughout the year. Tune in next week and we will go over the next inflation report. What is the market telling us? Is our thesis confirmed? And we'll discuss it and go over it, and we'll keep you educated and aware along the way. Thanks for tuning in. Ackerman Financial Group. Expertise you deserve, experience you can count on.